Welcome. Please let me explain the NeverLossTrading concept to you. Before we get there, let me reiterate that there is a risk in trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. Our concept is one-on-one training and coaching with you, and we do this online. We are more than 10 years in business, and with that we got a lot of experience in working with people. And what we do on the concept side, we follow algorithms that spell out where we see institutional money moves and put it on the chart for you. Never loss trading. Sometimes people say that's not possible, and that's not our claim. It comes from the idea of never stop loss trading. So instead of taking the stop, we are adjusting the trade and work with it. And so therefore never loss trading is not a promise that you never lose a trade. It's an idea and a concept of repairing trade and carry those forward. What makes us different to what else you see in the market? And there's plenty of choices. First of all, we provide you with high probability trading system, and we show you examples here, and we teach those one-on-one with you and coach you until it sticks with you. That's a big difference, because adult learning in a classroom setup, that's not working out. We saw that immediately, changed our concept, and we are working one-on-one only for the last 10 years. We also teach you to apply high probability trading to all your accounts, be it a 401k account, an IRA account, a cash account, or a margin account. We focus with you on the accounts that you can apply the principles regardless of where you have your money. Very important, we adjust our strategy to your risk tolerance and what you want to put forward in what you want to attain and how much risk per trade or in the entire portfolio you take. There we also show you how to hedge an account. So if things go wrong in an overnight state, that automatically you're going to be protected and not facing tremendous drawdown and losses. You will learn how to find best trading opportunities, how to put a business plan together that spells out when to best trade, how often to trade, and what returns to be expected, and also which strategies to be applied to always trade with limited risk. We pair our knowledge base with our system base, where you can see on the chart the entry, the exit, the stop, the probability of the trade setups, the rules to access those, and relate risk reward in your favor. All of that comes together, and let us now go into a couple of examples. Our charts spell out price thresholds: buy above a certain price or sell below a certain price to trade to the upside and the downside, and we always spell out a target and also the stops on the chart. But what's different? What do we do different? We have algorithms in place that identify underlying changes in supply and demand. You need a different math. Moving average is not going to get you there. We measure the SPU, the speed unit, how far a price move will reach, and we specify with that entries, exit, and stop, allowing you mechanical trading instead of interpretation, and we apply trade repairs as already said. So all of that together will be taught in the concepts, but on the charts you will see every situation, and now we go into detail. What you see here is a daily chart for Apple. May 15 forward to where I'm recording this, and you see a couple of situations where we have spelled out trades, and I want to carry those forward with you. Yeah? Situation 1 here, buy above 316.50 cents. So the next candle ticked out that threshold, and the target was immediately put on the chart here with the dot. And after 5 bars, that's what we assumed, we wanted to be at target 1, 2, 3, 4, bar number 5 on the top. Ticked out the target, we were out of the trade. Why? Because when that target is reached, we assume a slight pullback or potentially a reversal, and we don't want to be in it because we want to make a trade to the target, get out of it. But the situations reoccur. Yeah, so here you see situation 2. Again, we have a spelled out target that was here. Did the price go a little higher? Absolutely it did, but that doesn't matter to us. We spell out the situation if risk and reward at that situation is favorable, which it was, we'll take the trade and we carry it home. If trade reward is not favorable and there is some hindrance in the price development, like in situation 3, we're not going to do the trade. Yeah, so here you see risk to reward 0.521, so that means for $1 of risk, you only get 50 cents of a reward. That's not a good trade. We don't trade under those circumstances. And on that dashboard here, it's always spelled out the SPOO, the price distance, the return on cash, the trend information, and the relations of where to enter and where to take the stop, all on the dashboard. Yeah, so now here you see there you were not supposed to take the trade, but those rules you learned. If you did, you would still be in high probability trading, because situation 4, pretty easy to see, came into a trade, got ticked out, and came home here on the gap up. So even there we would have 3 winners in a row and 1 losers if you took that trade, but that was not one. So 3 winners just to be booked right along the price development of Apple. Indexes are usually a little harder to predict, but not a problem for our system. That is here the ES, the E-mini S&P 500 index futures. And you saw here 3 signals: agreed and say buy me. Yeah, so buy after the price threshold, so that was ticked out in the next candle, carried home, and come to target. Where was the target? Dot on the chart on the trade situation 1. Here it came home, and we concluded the trade. So then we have situation 2, short to the downside. Again, you have a target spelled out on the chart for you, and that was attained, and then the price did what? It reversed. And this is why we with the SPOO measure where to best get out to not get caught in the wrong direction. Situation 3, simple, got ticked out, 311.25 below, and that was happening in the next candle, came to target, the price even dropped down a little deeper, but that doesn't matter to us. You see, in a continuation, solid trades, clearly spelled out entries, exits, and stop, and the appraisal between risk and reward, and we only trade when those are acceptable or favorable for us. Here we take a very long-term view on the E-mini S&P 500 index, a monthly chart. So you saw here on the monthly chart 2 indications: sell below the price threshold 28.53 and bring it home to target, and this is exactly where the price started to reverse, but with that we would have been out of the trade. Do you have such pre-indicators telling you where to go? If not, give us a call and schedule your personal hour with us, where you can see how those systems work live. This is a day trading chart where we trade for consecutive price moves, here $1.60 for IBM, and you see late in the day indication, confirmed in the morning, reconfirmed with the first signal. Nice trade to bring this one home. And again on the reversal, first hour indication or first minutes indication to the upside, and conclusion for the trade to come home. So our systems work on all time frames, on tick frames, on ranges. We'll adjust those to your personal goals that you set for yourself and your affinity to the assets that you want to trade. Trading means decision making, and you don't want to be alone figuring out all these decisions, and this is why we are here for you. We help you to indicate the price motion for an option trade, which assets or which stocks have good option change, how to trade repair if something goes wrong for you, the max premium to pay or collect, the strike price to select, the time to expiration, and the option trading strategy. Do you want to have a debit spread, a credit spread, longer call or longer put? All of that depends and needs to be decided, and you want to have a concept for it, and that's what we teach. When we are working together, we put all of what we work out for you into a written plan, a financial plan, how often to trade, which assets to trade, what time frames to make your decision on, an action plan, when are the best situations, and what are the strategies you want to apply for trading. That's your guideline into your trading futures. Most traders don't want to do that, but trust me, that is needed. Once you have it and you have inhaled it, it'll guide you into your trading future. In a quick summary, there are multiple dimensions of striving for trading success: indication and strategy, risk management, discipline, being prepared, trade finding, following a plan, trade repair. All of those components will teach you and will guide you into your trading future with those. Here's an example for an option trader that came to us and worked with us, and he wanted to obtain $2,500 return per month. You'll see here he did much better, but where I want to focus you on, the average return to the average loss is favorable. This was what we reach by the trade repairs. Never stop loss trading. That's an essential tool. If you can get there, you are on the way to do the trades. Definitely, as an option trader, the person had to do 1 to 2 trades per day. Okay, that's fine. That was doable. And he was spending about 2 hours a day of work to get that done, and with a very favorable result that definitely paid back for the tuition for the NeverLossTrading mentorship. When working with you one-on-one, we put all the software and the charts together for you. It is based on Thinkorswim. We put real-time data with that forward for you without additional cost. You always know from the chart entry, exit, and stop, and when to trade. You know your position sizing because we help you with that to never infringe your risk tolerance. Time in a trade, so you saw in the example 1 to 5 bar, 1 to 10 bars, depending on the time frame you decide for the trade. Risk handling, and also the business plan, action plan, when to trade, financial plan, how often, what returns to strive for. All of that we bring together to you in our mentorship. Put an end to guessing from your chart where the future price development will carry you. Past-oriented prices like moving averages, MACD, RSI have probabilities between 51 and 54%. They'll not get you to high probability trading and giving you long-term returns. Come on board with a system that spells out clear-cut entries and exits, relates risk-reward, and carries out trades along with the price move of the underlying asset. Schedule a live demonstration. Call us at 866-455-4520 or contact at NeverLossTrading.com, and we work with you. We show you step by step of how that can be put in motion for you and how the chart produces the trading opportunities. We are looking forward to hearing back from you. Bye-bye.